Today, we're focusing on how to incorporate life insurance into estate planning. Estate planning just means deciding how your money and belongings will be handled if you become unable to manage them or after you pass away. You want to make sure your wishes are respected and that your loved ones are taken care of without extra stress. It helps minimize taxes and may provide money that your loved ones can use to cover expenses like funeral costs, outstanding bills, or even taxes. Life insurance can help support your estate plan, such as covering costs and bills. The money from a life insurance policy can help pay for things like taxes, funeral expenses, and any debts you might leave behind. This helps protect your family from having to come up with cash on their own. Keeping things fair for family members. If you have a business or property that's not easy to split among children or other family members, the life insurance payout can help balance things out. This means everyone can still benefit without having to sell off important assets. Paying off debts. A life insurance payout can settle any outstanding loans or mortgages, protecting your other assets from being used to cover these costs. And lastly, replacing what you give away. If you plan to leave part of your estate to charity, you can use a life insurance policy to make sure your family still gets the amount you want them to receive. When considering life insurance for estate planning, understanding the different types available is key. Term life insurance. It lasts for a set period, like 10, 20, or 30 years, and is generally more affordable, great for covering expenses like a mortgage if you pass away during the term. Whole life insurance provides coverage for your entire life, as long as you pay premiums, can build cash value over time. And lastly, universal life insurance. Similar to whole life, but with more flexibility in payments and benefits. This can be helpful if your financial needs or goals might change over time. Here are some tips to adding life insurance to your estate plan. Talk to professionals. They can help you figure out how much coverage you need and what type of policy is best for your situation. What is your coverage amount? Think about the costs your loved ones might face, like funeral expenses, taxes, debts, and everyday living expenses. Decide who owns the policy. Would it be more beneficial if a trust owns your life insurance policy rather than you personally? A tax professional can help if you are concerned about taxes or want certain protections. And lastly, review and update regularly. Life changes, things like marriages, divorces, births, and even changes in the law can affect your estate plan. Periodic reviews make sure everything is still correct. To make the most of life insurance in your estate plan, keep an eye out for these pitfalls. Forgetting about taxes. If you have a large estate, certain taxes could apply. Neglecting to update beneficiaries. Life changes fast, so make sure you update who receives your insurance money after events like marriage, divorce, or the birth of a child. And lastly, lack of coordination. Your will, trust, and life insurance should all work together. If they conflict, it can create confusion and potentially lead to legal disputes. Thank you for watching and taking the first step to help secure your family's future. By combining life insurance with a solid estate plan, you can help ensure your wishes are honored and your loved ones are protected.